What is going on, ladies and gentlemen? How are we doing today? Happy Wednesday. It's October 20th. Markets just closed an hour ago. HX going on an unbelievable run today. This is beautiful opportunity the stock market gives us. HX running today from $9 all the way up, hitting 21.50 after hours. Beautiful, beautiful. Just slowly kept gearing up, and gearing up all down here under VWAP all morning. Volume flat lines on it all down here. And then just look at all the volume just flow into this thing the rest of the day. On average, we're looking at around almost 400K volume flowing into this every 1 minute. And that's not all of it. When you look back on the bigger picture on this, always try to zoom out, remember. Look at how far this stock has gone, period. All the way back here. Let's see, in September, so the end of September, so 1 month straight, HX has just been trending up, and then getting this huge euphoric run to the upside. We've been seeing this a lot lately. A lot of stocks have just been slowly trending up and getting those big explosions to the upside. So from $1.70 running up to $21.50 in a month, that's a $20 run in 1 month. So this is life-changing type moves here. And this even ran up yesterday. Yesterday, it got that run up to $10. So, man, we can go back 1, 2, 3, 4 days straight on HX. Let's look at it here on this day. Just gradually trending up all day. Getting nice little pops on it, but bottom line, stock just holds trend all day. Buyers just coming in, buying at the trend line as it keeps pushing up. Let's fast forward to day 2 on this. Gets a nice gap up, then you get that morning dip. These are plays that I like to look out for as well. When stocks open up and fall down below VWAP, everybody has VWAP plotted on their charts. Everybody. It's 2021. Like the last 3 years, everybody has been using VWAP. So why not plot VWAP on your chart and you're going to be looking at what everybody else is seeing? That's what I want to do. VWAP has become popular within the last few years. Everybody's using it. So everybody's all going to be seeing the same thing, as I just said. So HX falls down below this VWAP, and then it gets up above it, finally, at the end of the day right here. Pulls back, holds VWAP, and all this volume comes in on it. And from $6.25, gets a nice rip. Pretty much up 75 cents at the end of the day. And then just hangs around at its highs the rest of the day. Let's go to day 3. Day 3 here, we got a trend day. Stock just holds trend all day. Gradually pushing up, and then at the end of the day, look at all this volume flow into it, and it just starts to lift up off that trend and starts ripping at the end of the day, going on a nice run from $8 up to almost $10 a share. So that's a $2 move right there when all this volume perks up and comes in. Now we could fast forward to today. So with that move happening on day 3 there, we get a nice gap up right here. Gaps up and runs to a high of 1150 just about. So when this opens up, you could see it was battling with pre-market highs all right here. And this even did trap some longs. And this is why you got to be careful with trading these overextended stocks, and especially early in the morning. All this volume is flowing into the stock right when that bell rings. People are going to overwhelm it and exhaust the stock. And look what look what this does to everybody. Just nasty. So from 1170s slams all the way down to 950. That's a $2 drop right there. So imagine you're taught to buy high of day breakouts. This stock gets really tight right here, and you see it. It's getting tighter and tighter and tighter, and you're like, oh, it's forming a wedge. It's going to break out of this wedge and keep pushing up. And when it breaks and rips up like that, and let's say some people are market ordering in, they're market buying in from $10.90. This rips up so fast, 70 cents with that wick. It rips up so fast. Everybody chasing after it, market orders in, they're getting filled at the tippy top up here. And then from that, just flushes down super hard. And you're down immediately $2 a share. And you're like, what happened? And then they halt it. And you're like frozen because you're in shock. You're like, what just happened? I literally bought the breakout and it flushed down on me. So imagine what that does to your head. And then you get disgusted with yourself. You walk away, and then you look back at the end of the day only to see the stock do this. And you're like, wow, I sold it for a nasty loss right here. And this stock went and ran up $12 a share. See how they play games with your head like that? And you could really beat yourself up if that happens to you. That's why I say I always like to try to wait. I try to wait at least 15-20 minutes after that market opens to place a trade. But sure, there are times I do place trades right out of the open. If you trade the open, you have to be fast with your decision making. You can't just hold and hope, because by holding and hoping, that stock's going to rip up $1, slam down $1.50. It's going to be so back and forth. And if you don't realize your profits, that stock starts slamming and sinking down. You're going to go into shock and you're going to freeze up and you're going to watch your P&L go from being up 1,000, down 1,000, down 2,000, down 3,000, down 4,000, and you're going to be like, oh my goodness, that just all happened so fast, and I don't know what to do. Should I hold or should I cut it? And then you're in that dilemma and you're thinking to yourself, why do I do this to myself? Why did I place this stupid trade right out of the open, and now I'm instantly regretting it, and I'm down, and I just blew up 3 works worth of work. I used to go through that all the time when I was just starting out. These fast moving stocks, you have to react to what you're seeing and adapt to the situation. Things can look good one moment, and then as soon as you enter it, you notice that something like the tape's super red. Like you can easily overlook something you didn't think of before you hit that buy button. So it's always good even when you think it's going to go and you want to buy, re-ask yourself, is there anything I'm missing? Pay attention to the small little details. And look at after HX got denied. Let's zoom in on this a little bit. So after HX got denied right there at the pre-market highs, and it slammed down and got halted, and it fell down below VWAP there. Look at volume just diminish on this. Everybody gave up on it and moved on to other things. But then as soon as it got back up over VWAP again, all that volume came right back. And this is insane volume right there. Look at the difference from a desert, nothing really going on, to all of this action going on right here. This is why we say volume is king in the stock market. Volume is what causes that imbalance between supply and demand. So when you're interested in trading a stock, you should want to be asking yourself the first question: is there that supply and demand imbalance? Is there a supply and demand imbalance? That's what causes price action to move like this. Whenever you have a low supply of something, so supply, we'll go back with this up here. Supply equals, there's a low supply of something, right? There's not much of it. And then you got demand is high, right? You notice volume is surging into a stock. Gradually looking at the volume as the day progresses, you see it. 1 minute you look, total volume on the day is at 2 million. You come back and you look 10 minutes later and you see it's at 2 million. You come back and you look 10 minutes, 15 minutes later, then you see it's at 3.5 million. That right there is telling me, okay, volume is continuously surging into this stock, so that demand is there. They're soaking up all of the supply. And when you guys are watching the tape, sit there and just watch the tape. Gradually, by just watching the tape and all of those sales go through, you're going to see, that's the receipt. You're going to see all of these buys come in, and you'll pick up on that. You're going to say to yourself, I see a lot more buying going on than I do selling. So a low supply, you got high demand. There's that imbalance factor there. That's what's key to look out for with these stocks. You got that imbalance factor. That's what makes these stocks tradable. It's simple as that. Simple as that. And then from there, you can use your technical analysis skills to put together a plan. Now, we just talked about a stock before this that was hovering just below VWAP and got above VWAP and had a nice pop on it. Or actually, it was way back here on this day. Right here. Once again, you see how the stock was just hanging out below VWAP, and then it got up above VWAP, and all that volume came in, and the stock surged up even higher. So you fast forward a couple days, which was today, pretty much the same thing, but more on an extreme level. Stock opens up, gets denied up above VWAP, falls down below VWAP, lingers just below that VWAP, and then gets up above that VWAP, all that volume comes surging in, and look what happened to the stock. It went wild, ripping up. Paying attention to the environment, looking left. We're looking for patterns that we've seen before, right? All you had to do was look back a couple days ago. Same thing happened. But this today, it just happened more on an extreme level. There was a lot more volume today surging into the stock than there was on this day right here. So look at the volume difference. Compared to this day, it's pretty, the difference is pretty noticeable, isn't it? It all stems back to that supply and demand imbalance. And then after seeing stocks like this over and over and over and over and over again, I've probably seen this well over 300, 400, 500 times. So these images get burnt into your head. You witness the situation. This morning we had RDUS gapping up pre-market. We were talking about this in the pre-market prep in the Discord. And we noticed on Thinkorswim, TD Ameritrade, RDUS was easy to borrow. So a lot of times, if you got a stock gapping up and it's easy to borrow, you want to pay attention to that. Easy to borrow for you guys that are new out here. We can say, I'll put it right here. It'll say like ETB. That stands for easy to borrow. That's for short sellers. So if they want to short a stock, they think it's up too high and it's going to come down in price. They want to capitalize on the downside movement of the stock. So they'll make money as the stock is falling down. That's shorting a stock. A lot of times you'll see stocks, especially in small cap land, it'll either say HTB, which is hard to borrow, or a lot of the times you'll see NTB, which stands for none to borrow. This morning on RDUS, it said ETB, easy to borrow. We know that 90% of people consistently lose money and fail as traders in the stock market. So if something's easy to borrow and it's up on the day, my thinking is, okay, so it's easy to borrow. Everybody's going to overcrowd this stock and short it because they think it's up too much, which could lead to a nice short squeeze. So RDUS gets a rip here from 1650, runs all the way up to 25 bucks. That's a big run. From 16 to 25, that's a $9 run pre-market. And as this pulled back down here to $20, and this is a nice psychological level where my green line is right here, and I'm drawing it with this yellow line. $20, that's a very, I always like to see stocks try to hold up at big psychological levels because I know everybody else is thinking the same thing. Let's see if $20, a whole $20 holds up. Nobody's saying, hey, let's see if $19 or $18 holds up. No, everybody wants that whole $20 to hold up. And once you've seen it time and time and time and time again, it's like a self-fulfilling prophecy. It is. We've seen this countless times. So as this was pulling back, and it look again right there too, if you've studied your candlesticks, you should know right there, that one little candle on the 1 minute, I know 1 minute charts can lead a lot of false signals, but I'm telling you guys, if you just pay attention to the charts and pay attention to the little details, the charts will unveil so many little hidden secrets. You just got to know what you're looking for. You got a little doji right there. What are dojis with candlesticks? They indicate reversals or potential reversals, right? So with that small little doji there, and that $20, putting it together, this got a nice run all the way up to $23. So that's a nice $3 run right there. From 20 up to 23, which was pretty much its pre-market highs. So when this market just opens up, you know right when that bell goes, ding, 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 volume is just surging into the stock. And you're watching it and you're seeing prices effortlessly rip up $1, rip down $1.50. It's madness. A lot is going on. So if you're thinking of trading that open, you better be fast on your feet, because you can be up in profit one moment and then down the next. So anytime you trade that open, always lock in profits when you have them. Do not get overly greedy and think, yeah, it's going to keep surging up and pushing up. Because I've had multiple times thinking like that, get in on a position right out of the open on a fast moving stock. I would get in and I'd be up in profit. Good profit. And I'd get overly greedy and I would not lock it in. And then I'd watch it all crumble. And I'd give it all back. And then I'd be in the red. And then I'd be pissed off at myself. And it would just ruin the rest of my day. The first 5 minutes of the day. And I have already ruined it. So we know market open. It's fast paced. There's a lot going on. So if you're thinking about trading that open, you gotta be fast. You gotta be. There's a reason why there's a trader out there, mad ass trader. He uses hotkeys. And he's the type of trader. Same thing with warrior trading. There are the two types of traders. They trade the open. And they have hotkeys set up for speed. They quickly get in and they get out with large size. They capitalize on the fast movement out of that open. And they're not just looking at a 1 minute time frame. They're actually looking on smaller time frames as well. They're looking at like tick charts. So for every second that goes by, they call it tick charts. You should have it on some of your guys' platforms. Here on Street Smart Edge, they have a tick chart right here. You go to the type, you click on tick. This is for especially in the morning when you're trading the morning. So a tick chart, it's gonna break it down every 1 second, depending on how small you want it. You can do like a 1 second tick chart, a 2-second tick chart, 5-second tick chart. That's how they're doing this. And this should just go to show you guys too that, I mean, some of you guys, you're probably like, wow, I never even knew about this. That's how much little small things there is in the stock market you have to learn about and know about to have an edge in this game. Just by knowing this, a lot of you probably like, dang, I didn't even know that you could look X-ray into a chart like that. So you guys all remember Bookmap, right? Bookmap, that's all that this pretty much is a tick chart. And they're putting an expensive price tag on it. That's why I don't use Bookmap anymore, because they're charging you for something that's free, which is a tick chart. So with RDUS, you see right here, we're looking at a 1-second tick. Look at all that resistance right there. You had solid support right there, but it stalled out up right here, and then it fell down. That's at 1840. So things happen and move so fast on this. And this is from, let's see here. Not giving me a time because Street Smart Edge has it screwed up to where the time is messed up on this update. But just by using a tick chart, man, learn something new every day. So RDUS from that 20 bucks, nice run up. The pre-market highs at 23, stalled out. Everybody gives up on it. If it can't break up through a level and it's just lingering at its highs, people are going to give up on it and move on to something else. Something that's actually performing. And from 23, this faded out all day down here to 18. So now with this pulling back all day, who knows, tomorrow, Thursday, or maybe Friday, we could see a nice bounce on RDUS. As people slowly forget about this name, I myself will be keeping tabs on this stock for any type of bounce opportunity to the upside. That's where we thrive with trades, are catching good bounce plays on stocks that people slowly forget about. I see somebody mentioning CEI. Yeah, CEI had a good run up yesterday from $1.30 to $1.80. This stock is getting pumped on Twitter by Zach Morris. He's got 500,000 people following him. So everybody knows CEI is a pump and dump. I'm not really interested in joining the mob with these pump and dumps. I mean, feel free, go for it if you want to, but I like to be cash and take advantage of all these opportunities that pop up every day. Stocks like HX, you know, HX, to me, this is where opportunity is. I mean, this stock ran up $12 a share in one day. Within 4 hours, it ran up $12 a share. Versus something like CEI, how much did this move up? It moved up from $1.40 to $1.80, so it ran up 40 pennies. And real quickly, there's no way you could have caught something like that. So you buy in on it at $1.70, and what it do today? It pushed up to $1.90, so it pushed up 20 pennies. And you're gonna have to really load up. You're gonna have to buy like 10,000 shares, 20,000 shares to make money on something that's pushing up pennies, you know? And you got to hold on to it for longer, putting you more at risk. Who knows what could happen? This company could come out, do warrants or offerings, or who knows what they can do. Take profit off the table, reinvest it back into the company, driving the price down back below $1. You know? It did its run up from 33 up to 5. So you got to think everybody who's trapped chasing after this on that big run up here, any type of bounce on this, people are going to sell into it. But CEI, it needs to break back up over $2 for people to keep coming back into it, and who knows how long that will happen. I'm not much of a swing trader. I'm a day trader. CLPS, see, there's no volume. There's no volume on this stock. There's no volume at all. Nobody's interested. So going back to that supply and demand and the imbalance is clearly not there. So we had that pop off, and then ATER keeps popping off. ATER the last 2 days running from $8 up to $10. So a nice $2 run on ATER. It's just, and this is all personal preference. It is. For me, I just see a lot more opportunity in stocks that run $1, $2, $3, $4, $5. Because I don't have to buy that many shares and a stock runs up $2. That's a good return. Versus something that's moving pennies at a time, I have to buy more shares of it to make money, only increasing my risk. So I need for it to push up 10 pennies, holding 20,000 shares to make good profits, but that stock could also fall down 10 pennies, and I'd be losing a lot of money. You get the thinking with that? I just don't see it. That's why a lot of people get caught up in these penny stocks like CEI, because they look at them like they're lottery tickets. They think it's so cheap and they can take $1,000 and buy a crap load of shares, $5,000, and buy what? At $2 they can buy with $5,000 like 2,500 shares. So then they start getting these unrealistic expectations, like all I need for it to do is run up $1 and I'm up $2,500. I'll make half of my investment. And they'll hold on for weeks, months, just to make that $2,500. And then you got something like HX. I'm going to come right back to it. In one day, runs up $11 a share. So from bottom to top, runs up $11 with $5,000, let's say. So 5,000 divided by 9. What is that? That's 555 shares. So 555 from bottom to top, times that by 11. That's $6,100. Even if you don't ride it from the bottom to the exact top, let's say you only catch $5 of this move, that's still $3,000 with 555 shares. That's amazing opportunity. That's amazing return. amazing in one day, less than one day. The stock did most of its move in the last half of the day. So this is where I see opportunity in these stocks like HX that can rip dollars at a time. We see them every day, every week. JSPR is another example. Look at this thing. Back right here, it ripped from $8.50 up to almost $18. So right there, in a half hour, it ran up $8 a share. That's crazy. Look at that. From 14, rips up to 18. That's a $4 move right there. So you got a $10 run there, a $4 run there. In total, this stock ran up $18. All within the first 2.5 hours of the day. Fast forward to this day right here. Look at this move. From $14.50, this thing rips up to $19. That's just about a $5 per share move, all within 10 minutes. That's insane. That's insane. And all I got to do is catch a little piece of that action, and I make good money. This is where it pays to be quick with these stocks. Even right here on this day, flat lines all day. From $13.50, this baby rips up to $15. So that's a nice $1.50 rip to the upside right there. And we see this stuff all the time. All the time. It happens every single day. Back to ATER. From $8 runs up to almost $10. That's a $2 run in one day. Today runs from 9 to 10. That's a $1 run right there. All within 2 hours. Nice $1 per share run. FCEL. Recently, 3 days ago, FCEL went from $7.50, runs all the way up to almost $9. So that's a $1.50 run right there. And then we recently, yesterday, had IRNT. Today is Wednesday, so Tuesday, yesterday. IRNT went from $9.75 all the way up to $11.75. That's a $2 run right there. So I love paying attention to these stocks that just rip dollars. Just because a stock is higher priced doesn't necessarily mean you make less money. They all have good range. Look at Playboy. Playboy from $22.50 in 3 days runs up to $30. That's a $7 per share run in 3 days. Opportunity is everywhere in the stock market, everywhere. DATS. Everybody remembers DATS. This thing was ripping $8.50 to $18.50. Back down here to $7.50, ripping up to $18. So many opportunities out here. So many. This one was a sloppy one, but it still offered some good rips on it. HLBZ. This thing, $11 rips up to $15. That's a $4 per share rip. Then the next day, after that rip, does it again from $11.50 up to $14. That's $3 move right there, all within 5 minutes. And like we've said, we see stuff like this every single day, every day. There's people all out here making money and trying to make money in all different areas of the market. So it's all about gravitating to whatever your personality is. If you have a very fast thinking type of personality, then you'll like these stocks that rip up and down dollars at a time. If you have a slow personality, you're very chill, leveled out, then you'll like stocks like ATER, where they just grind to the upside, grind down. There's all different personality types in the market. So pretty much today, I was done within the first half hour of the day. I traded RDUS pre-market and going into the open, making almost 1,500 on that. And then I tried trading LMDX and lost just over 300 on that. And that was my cue to wrap it up and call it a day. Closed up the broker. I'm up 1,100 on the day. I'm completely fine with that. And I didn't even trade XHX, you guys. And I'm perfectly fine with that. I'm perfectly content and fine with that. My job is to show up every day and lock in profits. Doesn't matter if I make those profits before the market opens or within the 5 minutes that bell rings. If I can consistently lock in green every single day, I did my job. I'm a consistently profitable trader. I'm living to trade another day. And that's how you stay around in this game. You don't hang around all day and overtrade, because that just forms bad habits. You'll slowly bleed out your account. You'll die from 1,000 paper cuts. And all it takes is for that one bad trade to wipe away a big portion of your gains and your hard work. And then that right there could put you in a bad mindset. And then you'll be fighting to dig your way back. So it's all about priorities. And you're asking yourself, do I see myself doing this tomorrow? Do I want to be here next week? Do I want to be here a month from now? Having that consistency mindset, not getting caught up in the big movers like this, to where you could easily blow up your account if caught on the wrong side, or if you're just revenge trading. Because we just talked about how somebody who might have traded this right here and took a bad loss on it, and then to come back and see the stock run up like this, $11 to the upside, that's going to screw with your head, especially if you took a loss on it, trading it right there, and the stock ran up and did this. That's going to screw with your head big time. All right, guys, that's going to wrap it up for this one. I'm going to end it. Enjoy the rest of the evening. You guys be easy out there. Keep studying. Show up every day. Get that experience under your belt, because at the end of the day, that's where you'll start making your money. After you get that experience and screen time in. The longer you stick with this and do this, the easier it will get. You just have to go through so many different experiences and lessons from yourself. You're learning about yourself. And then from that, that's where you start developing your own trading ways, your beliefs on the stock market. We all have different perceptions and beliefs about the stock market. Don't forget that. We all look at these charts differently. All right, you guys. Have that patience, have that discipline. Study, 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 as I always